InternationalInvestor.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Frivolity, Insanity, Perspicacity. Any Simpsons fans, you probably remember that word. Anyway, here we are. Actually, look at that. It's a bullseye day, middle of the month, October 2023, 18th, Wednesday, 18th. And actually, we had a fun secret options formula club meeting last night. Reviewed first 2 weeks study. Which kind of gave us a funny mixed message of the market. We don't often see this kind of action. Let's see if I can show you that image. Theoretically, fund managers, especially like pension funds and those kind of things, they get given money on a relatively regular basis by like teachers' pensions. That's a good example. Money just comes out of paychecks and goes into sort of a fund, and then once a quarter the fund managers are basically given permission to start putting money to work. So we often call them the smart money because they can pay for research. So we kind of want to follow what they're doing. This is a topic that we teach in our education program, our level 3 program called sector rotation. Actually, it was first made popular by Sam Stovall. I think that's what his name was. Anyway, and actually, I think I guess it doesn't say here, but anyway, stockcharts.com does it. Oh yeah, there you are. Sam Stovall's S&P Guide to Sector Rotation. So it's a fairly sort of industry standard kind of concept, but the point here is, as you can see, it looks like, believe it or not, the big money sort of flowed into the market, into utilities, which is this orangish sort of color, browny orangish. This is the first week of the quarter. This is the first 2 weeks. Try to get a sort of a gauge as to where money was flowing. If that's the case, then that would suggest we're sort of like right here on the economic cycle. The stock market itself has topped out, and we're slowly going through a correction phase, which I think if we look at the S&Ps, it does look like that. And the economy basically at full recovery at the top, and now threatening to roll over into recession. We've all talked about how the Fed was basically hell-bent on breaking the broader market, breaking the economy to try and get this inflation problem under wraps. So on balance, it would make sense. And then also, too, of course, we had that tragedy in Hawaii there a little while ago. So is the utility sector rallying because there's sort of a bit of a reprieve and all of that, or is it rallying because they figure that the Fed may be done raising interest rates? Utility ETF is probably not a bad look. And so this was a big part of our conversation in our SOF club meeting last night. Utility, of course, got to be able to spell it correctly. I'm not quite sure why that's not showing under funds. And unfortunately, I've got a bit of a brain fart here. I can't remember the utilities. Isn't that bizarre? What is the damn utility? Goodness. I look like an idiot. Anyway, we looked at it. It's interesting how it jumped up quite a bit. And there are some utilities that are looking very interesting. Of course, I can't show you the damn XLU. It's kind of funny how I brain fart there. Where are we here? XLU. So, as sort of a proxy on, is the Fed done raising interest rates? Of course, as they were raising interest rates and the talk of, oh my goodness, they're going to have to continuously, endlessly raise interest rates, utilities were really tanking. As you can see, a bit of a bounce, and that is the beginning of the quarter. If we look at the daily chart, we actually notice there's a cute little outside upside key reversal. And not really the best double bottom, probably candle body lows for trade location. Probably a nice little dip against these lows. If that does hold, then it probably means that the Fed is probably done raising interest rates. And, as I had said there earlier, a huge sort of unknown that's hanging over the market has this Hawaiian situation settled down. It's interesting how cute little double bottoms are coming in. And we were conjecturing about whether we want to take a whack at a bull call spread or something along those lines. Interesting price chart, I'll tell you that much. And of course, a pretty sexy yield if you are a yield hunter. So that was a big topic of conversation in our meeting last night. We're also actually pretty interested in these 3D printing companies. They've really come off quite a bit here. So this is DDD 3D printing. You can see, and actually I think David was mentioning that he figured that this was a bit of a megaphone. Bit of a sloppy top to the megaphone. Almost looks like a descending wedge to a certain degree. But he took a stab on a bull call spread. There's the data. You might want to look at it if you're interested in bull call spreads. Yeah, pretty cheap. I don't know. It looks to me like we could probably come down a little bit further there, but we'll keep an eye out for that. The one actually that I'm most interested in is we were looking at Kathy Wood's plays. And one of the stocks that she likes, I think it's NNDM. We can look at that in a moment. But one stock that NNDM was trying to buy and take over was this Stratasys. Terrible pronunciation. And interesting trade location coming down against the bottom end of the range. And of course, got nice bull divs forming down here. Really stupid. So I never pulled the trigger on this one earlier, but very interested in that name. So we did have some fun looking at various different stocks last night. I tell you though, I'm not overly impressed with the stock market right now. I think probably a really good proxy, and of course, keep in mind this is the eclipse season, so it's going to be a bit challenging anyway. We always say that the semiconductors are the ultimate leading indicator in the stock market, and this is sort of the market darling of the semiconductor sector, NVIDIA. And, through the entire summer, we were kind of conjecturing whether this would turn into some sort of massive fractal top here. And we were sort of humming and hawing about this rally being maybe a right shoulder, and sure enough, actually fractaled out, and now it's gapping its way lower here, coming up obviously into an important sort of neckline event window here, also trend line support. Wouldn't really interpret too much into here, but I wouldn't be surprised if the media and stuff starts talking about this and people start humming and hawing. But what I've found in my experience in the market is usually when these darlings actually start, the talk starts getting really negative. You saw that through here. That's actually when we're pretty close to some sort of bottom. So it'd be interesting if there was one stock to keep an eye on how it acts over the next couple of weeks, especially heading through this eclipse season, apex, and then through the Fed meeting. I think it's this NVIDIA. And how does it act around this $400 area? As you can see, there's a pretty large gap here to the downside. So if this thing does puke out, it could get pretty ugly. And, maybe on that gapping lower, fill in this huge gap that ends up being your capitulation bottom into that October window, end of October window with that final eclipse, October 31st. Probably also too, you could measure a move here. So if we do break through this trend line, it would just be a simple head and shoulders measured move. which means we're probably going to do something along the lines of there to there and clone that and project that off of the neckline. And oh, what a coincidence. Takes us right down to fill in the gap. I don't think that's a huge surprise. So hearing also some really weird talk right now. There was a Russian official yesterday who came out and explicitly said that he's getting most of his drones from China these days. So clearly, China is breaking the sort of do not sell stuff to to Russia. If I understand correctly, Putin is in China right now, and this whole Belt and Road Initiative. I think it's like the 10th year anniversary of that. So I mean, I guess it's still just business as usual over there. Although, of course, obviously the housing and real estate bubble has officially popped, and Evergrande and I think there's another one, Country Garden or something like that, are just an absolute disaster. So anyway, we'll see how that goes. And of course, there's lots of conjecture that the situation in Israel was encouraged to try and get the conversation changed from the world hating on Russia to, hey, maybe we can get the Middle East to all start hating on Israel in unison and inject a whole bunch more sort of confusion into the equation. So as a result, we did have algos turn back up, but very sloppy price action, up, down, up, down, up, down. And unfortunately, this is basically public, well, not public, but, if you come on even the site and just do the basic site membership, you get access to this image. We're kind of sort of sitting middle ground right now on the algo. So it's not really like the market's overbought. It's not like the market's oversold. I've kind of told you guys before, I would like to see the S&Ps actually go deeply oversold here on both the short and medium term for us to actually know that, yes, indeed, this is a cyclical bottom. That was a V bottom that was put there in the beginning part of October. So would it be healthy for the market to roll over here? And we have a serious thumping into the end of October, into that eclipse season, maybe on Nvidia dumping and that kind of stuff. It would make sense. And is it on oil going absolutely crazy? When we were looking at oil, we see it here up another $1.50 here today. Gold up $23 an ounce. So lots of fear and uncertainty injected into the market. And also, too, I think, we were talking recently about, crypto's correlation with the stock market. I have been noticing, Bitcoin's coming off here, and you can see tech stocks are coming off here. So I think they are acting more in unison versus Bitcoin moving with a proxy like gold. We're not out of the woods. We still got a bit of slog ahead of us, and the old cliche goes, buy when it snows, sell when it goes. It doesn't usually snow the middle of October. Probably in 2 or 3 weeks. That's probably when we start seeing the snow start flying back east. So it's going to be a bit of a challenge here, folks. I mean, and the interesting thing about this crude chart, of course, is if you just do a simple chaos theory off of this double bottom, theoretically, we should probably go right back up and test those highs. Boom, 2.618. So this is going to be messy. And of course, you look at the headlines, and the headlines don't read very friendly. Right across the bat. In fact, actually, I think I even loaded them up here. But Gaza doctors struggle to save hospital blast survivors as Middle East rage grows. So the last thing in the world they really wanted to do was go and hit a high sort of empathy target and to stir up all the anger in all the various different Middle East countries. And the Israelis went and took out a hospital last night. Well, that didn't help the situation at all. And actually, it was interesting. In the SOF meeting, we were watching crude. Like, crude just went absolutely nuts. there last night, big rallies, and then sort of immediately melted back down. I think on sort of like, okay, everybody calm down, calm down, calm down. We understand, Hamas has gone and done some horrific stuff, so don't be surprised at what Israel does. But anyway, we did have oil inventory numbers come out here today. So, through that oil inventory, I did an opening range trade here this morning on crude and got stopped out. So I shut down my day trading on that loss. Don't want to, if I lose there on that opening range trade, I don't want to compound the problem with even more losses. So oil inventory numbers did come out here. Drawdown about 4 million. Remember we had that huge build last week. I did hear some people saying that the crude market was catching a bid because of the massive drawdown. And as you can see, this theoretically is actually a bearish chart because higher highs and higher lows in inventory means less demand. So that big build last week kind of took the market by surprise. And of course, we had oil prices come off there. A bit of a drawdown. We cleaned out these recent lows. Our rule is that these are the noob stops. So in a weird sort of way, this pullback down here makes sense. The question ultimately is, are we going to break this drawdown here of 10 million? If we do, then that means that this whole bearish sort of bent that we've seen on crude oil is probably exhausted itself. And interestingly enough, we had other econs come out about the housing market. U.S. housing market data, month over month, you can see building permits down the states softer. Housing starts a little bit softer, still fairly robust, 1.35 million units. I think that's an annualized basis, but and even on a month over month basis, like this month compared to last month, it's pretty substantial rise. I suppose looking at the data, the one part of the market that did shock me was, of course, the Canadian housing starts. Very, very strong number there. 270 beat consensus by a good, 20-30%. And of course, all the politicians in Canada now are saying, well, the solution to high housing prices is build more houses, build more houses. The only problem with that, of course, is that, of course, the central bankers and the people who are supposed to try and keep control of inflation, they're not going to like that. That's pretty bullish for inflation. Anyway, we'll see how that goes. Only time will tell. I suppose if we get a housing starts number in Canada above this 280,000, then we're probably going to start seeing some fireworks. So we'll watch how that is. It an outlier? I mean, if this goes and M's out, keep in mind seasonal tendencies, then we know. But you can see, I mean, this is this Canadian housing market's still very robust, even with these higher interest rates. So this is a bit of a head scratcher, but nonetheless. So that's sort of the extent of econs. I had a whole bunch of sort of housing numbers come out here this morning in North America. And as Chris had pointed out yesterday, we just have a slew of Fed speakers. So even as we speak right now, 9:20, you can see we got Fed Walter speech and Fed Williams speech is starting in about 10 minutes. So the Fed speakers are probably dominating sort of the traders' attention in New York. What did this guy say? What did that guy say? Are we going to raise interest rates? Are we going to lower interest rates? Blah, blah, blah. If anything, and maybe this is, if we're lucky, calmer heads prevail, I'm kind of thinking this crude oil is looking actually kind of bearish. Keep in mind, that's a 3-minute chart. We actually look at the entire day's action on crude. It was, actually, where do we want to show this? I guess this was the weekly chart. Here. Daily chart, is that basically a shooting star? Is this a Joby gap? Goodness. So we'll see how this goes through the day. It does make sense at the 30 SMA that this thing stalls out a bit. And as I said, that Fog and Bomb actually suggests we need to work our way all the way back up here. But Yeah, I suppose for the day traders, like I said, I hit my personal loss limit for my trading account today, so I shut her down. I'll come back tomorrow and take a look again. But for those people that are still interested in the market and doing stuff, this looks like an interesting setup. My bot setup does the market retrace 33 to 66%, and then project those highs off of this high. And where is 25% of this range? That would be sort of your entry. There we go. And interesting enough, one high, two highs, three highs. Notice how this M right here. So this actually would probably be a pretty good swing trade. Well, 10-minute chart. Maybe, I'm going to say somewhere between day trade and swing trade. But you can see it's there. Probably a loss of this 200 SMA on this 9-minute chart. And ultimately, what I'd love to see to make this thing look super sexy is a nice market structure failure through this trend line, through that 25 level and the 200 SMA. So I'll be watching that through the day. And interesting how that inventory number that came out right here didn't really have a huge impact on the market. So anyway, we'll see how this goes. And if we can firm up and turn back up, and like I said, on the daily charts, that could potentially start looking like a Joby gap, because we did gap higher yesterday. I guess Chris is trying to tell me that my time is just about up with you good people, so I should probably get on to other things. Looking at the broader market, one thing I did notice, and I wonder whether it's on rising commodity prices. I suppose those housing numbers are still relatively robust, but you can see that the bond market is not happy here again. If the bond market is not happy, remember we were conjecturing recently, maybe we have W's coming in here on the bond proxies, and you can see M. So if anything, short-term interest rates are actually performing the best. This is the 2-year bond here. Longer-term interest rates really puking out, but in a weird sort of way, that's exactly what the Fed wants. That will flatten the yield curve, and if longer interest rates are going up, then that means that, hey, they actually think the economy is firming over time. So, and more economic activity, the further we go out in time, means more inflationary pressure, so long bond heading higher. The issue here, though, of course, is that what does that do to Joe Sixpack, who wants to buy a house? And you can see that mortgage rates just keep cranking higher here. So it's a mixed bag. And then, of course, we've talked recently about things like the 10-year bond, its yields moving up here. Like so, did we just hit a major technical objective, AB equals CD? This has been playing out basically for the past year and a half. Sure looks like it. What we would have to see is some sort of economic activity that sort of says, okay, things are about to take a pause. Now, maybe if crude oil prices go absolutely insane, that might be like, whoa, the economy is really going to come off here. But right now, the way that I'm interpreting this is as crude oil prices are moving higher, that is more inflationary pressure. So your final sort of proxy, again, we're coming up to some pretty big technical objectives, 2.618, AB equals CDs. But our little inflation deflation proxy gauge here just moved to new highs. And it's saying that investors are still willing to pay up for that inflation protection. They don't think that the inflation problem is done by a long shot. So do we see that in other parts of the economy? Our sort of time-tested rule is Dow theory. If the transports cannot make new highs, don't believe what you see out of the industrials. And you can see the transports are getting smoked here again. New M's coming in here. So there's no way the stock market can have a really sustained rally with the transports looking like that. And I did notice some of the bigger transports names, they're looking tough here. So like American Airlines, which is a pretty simple transport proxy for the consumer. What do you think? Are the consumers buying lots of airline tickets these days? Doesn't look like it. Broke through key support here. I mean, does this turn into some sort of measured move continuation pattern? I don't know, but there ain't no love there. And then I think I showed you recently things like Federal Express, which would be a great sort of business proxy. Oh my goodness. Is that not the market smiling at us most egregiously? So heading into the end of October here, eclipse season, all that kind of stuff. You saw what Nvidia looks like. Remember, semiconductors are the ultimate leading indicator. And now transports not looking very happy. It looks like we're building to some sort of big crescendo here into that October event. The interesting thing about that, though, is I would actually like to invest some money in the market. And if anything, I'm kind of hoping that we do get a big drubbing because I've got a bunch of money sitting in the money market. And I'd actually like to go and start, putting that money to work in the stock market. So, yes, market's looking toppy. Looks like we are coming off. There's lots of sort of internal problems in the market, whether it be things like the Dow theory or whether it be things like bond yields themselves. US dollars catching a pretty substantial bid here. Euro's getting smoked. Japanese yen's getting smoked. Interesting, even the Canadian dollar isn't really overly happy, even though we had that strong housing number there in Canada. And then I suppose our final conversation with this audience, what the heck's going on with Bitcoin? What a big surprise of weekly charts. We are just sitting right at all this moving average resistance, right underneath that major trend line resistance level. We had the big spike on Mr. Fink's accidental media manipulation bit there. Maybe accident, I don't know. It doesn't really surprise me what happened there, but unfortunately, I think a lot of people are now going to be trap bulls. They are trapped up there. And actually, I was pretty impressed. A number of TRIers were like, well, that's a reload zone. I want to short that. I even heard Sjord yesterday saying, Jesus, that would have been a nice short up top there. So there is the weekly chart. And one thing I don't like the clean weekly chart. This is, trend, absolute mess, but nice clean chart. One thing I don't like about this market is the fact that the volume here looks very suspicious here on this rally. I think I mentioned that yesterday. I guess the only thing we could maybe touch on here a bit is some of the altcoins. The little, what was that funny one? Loom, it's come back down to earth. So that rally is pretty much exhausted. But I am noticing there are little ones that are trying to pick up sort of the lead. This LTO, I've noticed that thing's looking awfully WE. So let's see whether that thing fires. You can see all my squiggly lines. I was kind of thinking maybe we might get a bit of a rally in there. Some of Sjord's names that he's actually investing some serious money in for the next bull cycle. I don't know whether I can buy any of these here now, though. But you can see a number of his names are green right across the board, but none of them are in good trade locations, so I can't really touch any of those. And then there was one or two. I think Eddie. And actually, this is an interesting one. This is, I think Chris really likes this as Bancor. Again, I can't buy that there, though. But it's interesting, actually, through the early morning, this thing was rocking and rolling. So it's kind of petered out a little bit. We also noticed and had a fun conversation yesterday about how you can use the order book to try and help you understand levels. So, Brian, he loves his reload zones. And if you look at the order book, you notice there's huge bid walls. And this was a good example down at these levels at appropriate fib levels. So we had a really fun conversation yesterday in the after party. A few names, some good demonstrations of these concepts. Big bid walls at appropriate technical levels. If you're going to throw your bid in, how do you do that? So those are the kind of conversations that we're having at TRI. And in fact, you can see this little guy here. He is working his way right back down to that level. And if I could buy some down here, I will. And FYI, TRIers, if you have the chance on Saturday, we're going to have a little old lady sort of meetup, just hang out kind of thing, just chit chat. So if you are an altcoin or if you are a little old lady, we have the littlest, oldest, ladiest TRI. Eddie's going to be telling us a little bit about his adventures in little old lady land, and of course, most little old ladies have names are named Eddie, right? So that sounds about right. So anyway, I look forward to that fun event Saturday morning. If you are a TRIer, and make sure you're in the lounge, probably about 9-10 o'clock Pacific time. Me personally, I'm super excited because I want to get back on the buy side. Some of the money that I pulled out of Loom, it's just sitting there itching to be reinvested. So I'd love to see names that are down at the bottom end of ranges like this guy. I'd love to see this guy's down in this level here come the weekend, and I'll start loading back up again. So, all right. Okay, so there's your report for today. I don't know whether I gave you much value. I sure hope I did. It's a little bit of a wonky market state. Obviously, we have big geopolitical things pushing stuff around. And we didn't have a lot of econs today, but the econs that did come out today and show US market, still relatively robust, a little bit softening. Canadian housing market data is still very strong, but it doesn't look like the Canadian dollar is really respecting that number. So maybe there was something funny about that internally that I missed. I don't know. All right, well, there's your report for Wednesday, 18th of October. Keep in mind, too, we do have options expiry coming on Friday. So quite often what they'll do here, especially on like a Wednesday, is they'll make things look absolutely ugly as possible. So people go panic buy put options. And then when I come back on Friday, maybe we'll show you the options open interest. And did they pull off another big con job, getting everybody in the public to buy puts? And then all of a sudden, mysteriously, you see maybe late Thursday, early Friday, a big old rally comes out of nowhere, and a lot of those options expire worthless. They've been a pretty consistent theme of late, and I get the feeling they're doing exactly the same thing. So maybe don't get too sucked up in the bearish euphoria today. If you did want to put on shorts, if you did want to consider, maybe let this big options expiry get out of the way, and then let's see what the market looks like maybe first thing Monday, Tuesday kind of idea. If they do dump the market hard tomorrow, again, like I said, encouraging the public to buy puts, maybe first thing Friday morning, you might even look and see if there's any bargains out there, really cheap prices. And, they might even dump things like these kind of altcoins and stuff down into buying windows. And maybe that's going to be our opportunity through early weekend. So, all right. There's your report. Have yourselves a great day. PMA for the win. I've got meetings with Josh, I think, here after we're done this. So I think we'll probably put the after party on hold today. But we'll see everybody. Of course, have fun with Julian tomorrow. He always makes for a lively conversation with the audience, the gun show and all that. You're more than welcome to pop on the site. In fact, actually, we're working diligently on all the Black Friday event deals and all that kind of fun stuff. So that's coming down the pike here soon. I can't really comment too much on that. I'll have this meeting with the marketing team today, but maybe Julian will have something a little more solid for you to chew on tomorrow with regard to all that. All right. I'll try and stop talking. Have yourselves a great day. PMA for the win. Remember what your number one job is. Don't take no win nickels. And bye for now.